Hi, welcome to Search for Yields, the fortnightly newsletter from INR Bonds. I am Arjun Patsati. And in this fortnight's Search for Yields, we are going to highlight the bonds of the month, which is now going to be a regular feature of all our SFY for the second fortnight of the every month. And so what is the highlight of what are the bonds of the month? The one is Credit Grameen. It's a microfinance company. And the other is Cholamandalam Investment and Finance Company, which is a South-based lender and a very old lender. Both are listed on the stock exchanges. And the main aspects I will talk to you about why these two are the bonds of the month. Now, before we go ahead with SFY, this is not a a recommendation or an offer to buy or sell Chola or Credit Grameen or any other bonds under discussion here. All information that we give here is from publicly available sources of released by the companies and from stock exchanges. And bonds carry interest rate risk, that is, prices can go up and down. Credit risk, where companies can default if their fundamentals deteriorate due to various circumstances, and this can lead to capital loss for investors if companies default or there is credit rating up downgrades. And the third is liquidity risk, when the bonds cannot be sold in the secondary market before maturity. So investors have to understand these risks and consult to financial advisors who understand and are able to do enough due diligence to recommend bonds to you. Then going ahead with the search for yields. Now, Credit Grameen and Chola have two very good similarities in the very recent in the last 10 to 15 days. Both came out with excellent results in terms of performance. And after the results, both the equity prices are trading at their record highs. And both equity prices have, both companies' equity prices have rallied sharply and have delivered excellent performance. The companies also have shown very good guidance and are hugely confident of maintaining their strong performance. Now, the performance of these companies and are all available to you public, or you can log into INR Bonds and check out the our information that is given to you on these companies. Now, this is for fixed income investors and financial advisors who allocate fixed income bonds to their clients' portfolios. Now, if you're a financial advisor, obviously the best place for you is INR Bonds Partner Portal, where you log into INR Bond, the partner portal, check all the bonds information that you require, check our curated list of bonds through our app, QuickInvest by INR Bonds, and get which enables you to take informed decisions for your clients. Log into partner portal and empanel with INR Bonds and see your fixed income assets grow. Now, these two bonds are traded on the secondary market. Cholamandalam, in fact, came out with a primary issue recently. They came out with both are listed bonds. They came where the minimum face value is just ₹1,000. The bonds can be traded through the stock exchanges or through bond platforms like INR Bonds. And the bonds, Cholamandalam bonds, after listing, has seen the prices go up for the bonds. That means the yields have come down. and so has Credit Grameen bonds. After the results have come out and the bond prices have gone up and bond yields have come down. Now, both the companies have shown very strong performance. Like I said, Credit Grameen is in the business of microfinance, and they have seen very good traction in their business. They have maintained for a microfinance company, which is very risky lending normally. They have maintained a very low net NPAs, non-performing assets, and so which shows that they are able to control their credit quality. Their leverage is reasonable, and they have good capital adequacy. More importantly, with their equity prices at all-time highs, they can access liquidity for shoring up their capital whenever required. Cholamandalam, to a traditional commercial vehicles lender, which was moved into other areas of finance as well, has shown excellent traction in their core business. And they have brought down their NPAs that were pretty high. They have also been able to maintain leverage. And given that they are supported by a very cash-rich group, which is a Murugappa group, where the group itself generates positive cash flows. The strength of Chola is both from their own intrinsic performance as well as from the ownership and the promoter group. So both these put together clearly make those bonds pretty much when uh, 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 like in equity markets, pretty much on a risk return basis, can provide good rewards for the risk investors take. Financial advisors obviously will come to INR bonds and check out all the information before advising their clients to invest in these bonds. Chola bonds are trading at lower yields than uh, Credit Grameen bonds, largely because Chola is a higher rated issuer. The 2 to 5 year bonds are trading in a range of around 8% to 8.25 to 8.3% levels. And as I said, the prices have gone up. And at these levels, if you compare it to other bonds, other fixed income products, the levels are pretty much very reasonable for investors. So if you compare it to fixed deposits or mutual fund schemes or even GSECs or other AAA bonds, Chola bonds are pretty much offers a good risk return profile. Credit Grameen bonds, given that it's rated lower, AA minus, and A plus by ICRA, and could potentially see an upgrade uh, because of their performance and strong balance sheet. But given that microfinance is still a um, uh, very risky lending business, as seen, and has got a lot of pitfalls as well, the rating agencies may not really wish to upgrade. But the point is the bonds are trading at higher yields. So the 1.5 year bond, which is that is trading at around 920 to 930 levels, and the 2 year bond, 2.5 year bond, is trading at levels of around 9.25% levels. And so these bonds obviously offer at least 1% over Chola bonds, but the rating is lower, and the risk given that it's microfinance, there is investors still demand a higher risk premium. And financial advisors can definitely look at these bonds, study the performance and the guidance, and making sure that the environment, macro environment, as well as the company performance are in sync. And then and um, uh, look at these bonds and suggest the bonds for their clients. Investors too may do enough due diligence. They want to look at these bonds to invest in. But so these two bonds are the bonds of the month, and INR bonds gives all the information on these bonds that is required. So especially, most importantly, the price discovery process, where you can know exactly where the bonds are traded and make sure you're getting the best prices available in the market. And through bond platforms, the cost of investing is zero. And there is no risk in um, uh, investing, as all the transactions are through the BSE or NSE clearing houses. So there is no counterparty risk in settlement as well. So for investors who understand bonds and are able to do their own due diligence, and financial advisors who can do the due diligence on these bonds can recommend. I mean, can look at these bonds for recommending for their clients. Obviously, after studying all the risks involved, and again, all the risks are given by INR Bonds Risk Score as well, their own proprietary risk. Thank you very much for listening in, and do not forget to follow us on our YouTube channel if you've not done so already.